In the world of digital assets, there is a feeling in the air. It is a quiet but persistent hum of anticipation. Experienced investors and newcomers alike are all asking the same question. Are we on the verge of the next great crypto bull run? A bull run is a period when market prices rise consistently over time. It is a season of explosive growth, widespread optimism, and life-changing gains for those positioned correctly. This isn't just wishful thinking. The feeling is backed by a convergence of powerful market forces. The conversations are happening everywhere, from high-powered boardrooms on Wall Street to online forums buzzing with activity. The market feels like a volcano, quiet on the surface but with immense pressure building deep below, ready to erupt. The current excitement is different from the speculative frenzies of the past. This time, the foundation feels stronger and more mature. We are not just talking about hype cycles anymore. We are talking about fundamental shifts in how the world views and interacts with money and technology. The number of people who own cryptocurrency has now surpassed 400 million globally. This shows a massive increase in adoption and awareness. People are starting to understand that this technology is not just a fleeting trend. It represents a fundamental challenge to the traditional financial system. The groundwork laid over the last few years is finally starting to solidify into a launchpad for what could be the most significant market expansion we have ever seen. The last few years have been a period of intense building. While prices were down during the crypto winter, developers and entrepreneurs were hard at work, refining protocols, building applications, and solving real-world problems. This period of quiet, focused construction is often the necessary precursor to a powerful market rally. The technology has improved dramatically. Blockchains are faster, more secure, and more scalable than ever before. This means they can support more complex applications and handle a much higher volume of transactions. This underlying technological strength is a key reason why so many people believe the next wave of growth will be more sustainable and impactful than anything that came before it. So what does this mean for the average person? It means that an opportunity is presenting itself. It is a chance to get involved in a technological revolution that is still in its early stages. The conversations happening now are not just about getting rich quickly. They are about understanding the profound changes that are taking place in our financial infrastructure. The feeling of an impending bull run is a signal that the market is recognizing the immense value that has been built. It is a sign that the world is waking up to the potential of a decentralized future. The quiet hum is growing louder, and it is becoming increasingly difficult for anyone to ignore. Two monumental events have acted as rocket fuel for this bullish sentiment. The first is the Bitcoin halving, which occurred in April 2024. This is a pre-programmed event that happens roughly every 4 years, and it cuts the reward for mining new Bitcoin blocks in half. This time, the reward dropped from 6.25 to 3.125 BTC per block. In simple terms, this means that the supply of new Bitcoin entering the market has been drastically reduced. When demand stays the same or increases while supply is cut, prices tend to go up. Historically, every single Bitcoin halving has been followed by a major bull run within 12 to 18 months, and there is no reason to believe this time will be any different. The second major catalyst is the long-awaited arrival of institutional money. In January 2024, the U.S. Securities and Exchange Commission approved the first-ever spot Bitcoin ETFs. This was a landmark decision. It essentially gave a green light for the biggest financial players in the world to enter the market. Giants like BlackRock and Fidelity can now offer Bitcoin to their clients through a familiar and regulated investment product. This has opened the floodgates for billions of dollars to pour into Bitcoin, creating a massive wave of new demand. This isn't retail speculation. This is Wall Street giving its official stamp of approval, making it easier and safer for mainstream investors to get exposure. The impact of these two factors cannot be overstated. The Bitcoin halving created a supply shock, making the asset scarcer and more valuable. At the same time, the approval of ETFs created a demand shock, bringing in a tidal wave of capital from the traditional financial world. It is the perfect economic storm for a price explosion. We are seeing these effects already. Bitcoin's network security, measured by its hash rate, has hit all-time highs, showing the miners' long-term confidence. The steady inflows into the new ETFs demonstrate a persistent and growing appetite for the asset among the world's largest investors. This combination is incredibly powerful. What this tells us is that Bitcoin has graduated. It is no longer a niche asset for tech enthusiasts and cypherpunks. It is now a legitimate institutional-grade store of value that is being integrated into the global financial system. The halving ensures its digital scarcity is mathematically enforced, while the ETFs provide the bridge for mainstream capital to access it. These are not temporary spikes in interest. They are fundamental structural changes to the market that are setting the stage for a prolonged period of growth. The foundation is set, the fuel has been added, and the engine is starting to roar. While Bitcoin is leading the charge, the real excitement for many investors lies in the world of altcoins. These are all the other cryptocurrencies and projects that exist beyond Bitcoin. If Bitcoin is digital gold, then altcoins are like the tech startups of the digital world, each trying to build the next big thing. We are seeing a new wave of projects focused on solving specific problems and creating tangible value. For example, the Ethereum network is undergoing major upgrades like the upcoming Pectra upgrade, which will make it faster and cheaper to use. This makes it a better platform for decentralized finance, NFTs, and other applications, which could push its price well beyond its current levels. One of the most exciting trends is the rise of projects with clear real-world utility. Investors are looking past the hype and focusing on projects that can actually be used. A great example is SpacePay, a startup that allows any retail store to accept crypto payments using their existing credit card terminals. It solves a huge problem for merchant adoption by instantly converting the crypto to cash for the business. Another interesting area is Layer 1 blockchains designed for specific purposes, like Hyperliquid, which offers a high-speed, no-gas fee trading experience for DeFi users. These projects are not just speculative assets, they are building the essential infrastructure for a new digital economy. Of course, established altcoins also play a crucial role. Projects like Chainlink, which provides real-world data to blockchain applications, and Aave, a leading DeFi lending platform, are like the essential utilities of the crypto ecosystem. They provide foundational services that thousands of other projects rely on. As the entire crypto market grows, these blue-chip projects are expected to grow with it, as their services will be in even higher demand. Their long track record and proven technology make them a cornerstone of many investors' portfolios as they look for reliable growth during the next bull cycle. They represent a more mature and stable part of the altcoin market. The key takeaway is that the crypto ecosystem is diversifying rapidly. It is no longer just about Bitcoin. A rich and vibrant landscape of altcoins is emerging, each with its own unique value proposition. From new meme coins like XYZverse aiming to build massive communities, to critical infrastructure projects and utility-focused startups, there is an incredible amount of innovation happening. This diversity gives investors more options and spreads the potential for growth across the entire market. The next bull run will likely be defined not just by Bitcoin's rise, but by the breakout success of these innovative altcoin projects that are building the future of finance and the internet. The mindset of the average crypto investor has matured significantly since the last bull run. The days of throwing money at any project with a flashy website and a vague promise are fading. Today, there is a clear shift towards demanding real-world utility and tangible value. Investors have learned from past mistakes and are now asking tougher questions. Does this project solve a real problem? Does it have a clear business model? Is there a genuine demand for its token? This focus on fundamentals is a healthy and necessary evolution for the market. It forces projects to deliver actual products and services, not just hype. This newfound prudence means that projects with clear use cases are getting the most attention. Investors are looking for substance. They want to see platforms that are being used, generating revenue, and building sustainable ecosystems. This is why projects like SpacePay, which directly addresses the challenge of crypto payments in retail, are generating so much interest. The market is rewarding builders and punishing speculators. This shift makes the entire ecosystem stronger and more resilient. It fosters a more sustainable kind of growth, built on a foundation of real innovation rather than pure speculation, which is critical for the long-term health and adoption of the technology. However, it is crucial to remain level-headed and acknowledge the risks that still exist. No bull run is guaranteed, and there are several factors that could derail the current optimism. The biggest threat is regulatory uncertainty. Governments around the world are still figuring out how to approach cryptocurrencies. A sudden, harsh crackdown in a major country could easily spook the market and halt the rally in its tracks. While the ETF approval was a positive step in the US, the broader regulatory landscape remains a patchwork of different rules and approaches, creating a persistent level of unpredictability for investors and builders. Furthermore, we cannot ignore macroeconomic factors. The crypto market does not exist in a vacuum. It is influenced by the health of the global economy. A sudden recession, unexpected high inflation, or major geopolitical conflicts could cause investors to pull back from riskier assets like cryptocurrencies and flee to perceived safe havens. While many analysts expect favorable conditions, such as potential interest rate cuts, nothing is certain. The journey ahead is filled with immense promise, but it is essential for every investor to be aware of the potential roadblocks. The excitement is real, but a cautious and informed approach remains the smartest way to navigate the path forward.